Canada is currently in a seismic economic shift with some of the largest economic uncertainties it has ever faced. Tariffs are absolutely wreaking havoc all over Canada, and there has been zero shortage of headlines calling this, calling that out, just craziness everywhere. And with all of this happening, is it still a good time to buy a home? CBC's About That video seems to be separating themselves from the pack, being one of the very few sources to tell Canadians that right now is a good time to buy, when everybody else, including myself, saying, maybe not, just the opposite. So in this episode, I'll break down this video to separate the real data from the noise and what is CBC not saying to its viewer. Who exactly is the audience for the CBC video, and who exactly are they trying to target? It's important to highlight here that it is a good opportunity only when it comes to a certain segment of the market. And that's exactly what I'll be explaining to you. This one-size-fits-all narrative that CBC is suggesting is a far stretch from what I would deem is reality. This is a good time to remember that real estate is not about timing the market, but rather time in the market. So with that, be sure to keep watching as I dig deeper to unravel this CBC About That report. Hi, my name is Zen, and if you're enjoying my data-driven and number-crunching real estate updates, be sure to like and subscribe.
For those who are willing and able to dive into the housing market, now might be a pretty good time.
So them by saying it may be a good time, it's not going to apply to everybody, because I do believe to some extent, which I'll show you later in this video, that some people will have an advantage, especially what I've been talking about, if you're not affected by the trade war. However, it's not a good opportunity for everybody to be jumping into the market, and I'll show you a little bit why.
Look here at this little spike. That's the end of 2024, when things started to look like they were about to rebound.
So this is very true. I have been saying this in my video as well, but I think everyone needs to understand what the definition of rebound is depending on who they're listening to their information from. When I was talking about it was rebounding, I was referencing to the fact that it was reverting back to the 10-year norm, which is what in the Canadian sales this had over here.
In a big way. Interest rates were finally down to what the Bank of Canada considered neutral, a nice steady place. Buyers were jumping back into the market, and pretty much everyone was predicting this was just the beginning. Both prices and sales would jump.
Sales would jump for sure. Prices really depends on the asset class.
In 2025. But then, just a month later, the twilight zone, because all of that fell off a cliff.
So I talked about this as well for the February stats that came out in March, where the sales were down 30% from last month, which were the worst that we ever seen. And it was a bigger drop off than from the month during the pandemic and the month before that. So that's how much uncertainty we've had because of the trade wars.
The uncertainty of the last few weeks seems to be causing some buyers to think twice about big financial decisions right now.
100%. And this is what we've been always saying. The key word in this market with that new president down south is uncertainty.
But here's the flip side of that. For those who are willing and able to dive into the housing market, now might be a pretty good time.
Without realtoring this on you guys, yes, it is true. There are some people who should be taking advantage of this opportunity right now because of the trade war.
And if you're one of those people, you may have some leverage because, say, the person you're buying from needs to sell in the next 30 days for whatever reason. Since sales are down, they're likely getting fewer offers, and that means less of a bidding war for you.
Hey, it's me interrupting myself. Ready to make a move? Just one free call, no hassle, put decades of experience to work for you. This is all 100% true. In the condo spaces, we're not seeing people hold their offers, but on the freehold space, we're seeing very, very busy open houses, even on our listings. We're talking like 10 to 15 people per day on the weekend. However, it's not necessarily translating into offers on offer night, depending on the price point.
Just know this, the window of opportunity might, maybe, be pretty small.
And this is where I have that minor issue with, because people are going to have a fear of missing out and FOMO. And I'm trying here to explain that, yes, while there is an opportunity here, you may not be in that category to take advantage of that opportunity.
And I'll give you a few reasons why. Last spring, a BMO survey showed that 72% of aspiring homeowners in Canada, meaning people who don't own a home but want to, they were waiting for interest rates to drop, waiting for the overnight rate to hit 2.75%. That just happened.
What I will say is very true is that if you're to buy a property at the exact same time last year, you're looking at an average variable of 6.8. Now you can get something in like the low fours. So there are savings when you go from the 6 to the 4. The other thing I want to add on to the fact is that I highly doubt a lot of those people who are saying, hey, I needed to hit this rate before I buy, is saying that, hey, that's how much I qualify for. That's more of a comfort level and kind of a consumer confidence. Right now, the consumer confidence is at the lowest it's been basically since the pandemic, right? That's where it is here and that's where we are here. So to say that of the 72% of people who may or may not be affected by the trade war is waiting for a specific rate to jump in and we have a lot of pent-up demand, I think it's a little bit misleading.
And we saw something similar happen a few years ago in early 2020. Home sales, home prices, and interest rates all dropped.
He's referring to the pandemic where there are a few months before rates decide to drop, where you took advantage of peak fear where the sellers were freaking out that maybe real estate prices are going to fall and crash.
And yeah, the going was good for a while. A golden opportunity for those who were able to push past the pandemic hardship and uncertainty. You could buy a home at a lower price and at an ultra low rate.
So I think this is what this video is alluding to, where, hey, we may have this opportunity right now because things are frozen and uncertain, similar to like pandemic in 2020. But I've always preached one thing is us as Torontonians need to stop going into the real estate market with a day trader's mindset where we're buying and selling, because it's just not that type of market. And this idea of timing the market with this opportunity isn't actually the right thing to do. And let me show you why. So here you are looking at the average price, basically going back to 2019, where it was, yes, $654,000. Now, if you were trying to quote unquote time the market, let's say the price right before the pandemic was $780,000. You had this minor dip where people freaked out and prices came down a tiny little bit, call it 3 or 4%. And then things kind of rebounded as we were allowed to go back out and went back to $800,000. And then over time, obviously, we got to the peak of over here. But the idea that this is a golden opportunity and you should be buying right now because you have 2 months is so short-term thinking, because you're thinking about how you can make a quick buck from February 20th to call it May 20th. Whereas in reality, if you just focused on holding your real estate long-term, you enter point whether here, or here. But if you ultimately end up here, you're still in the black and you're making money. And that's the problem I have with a lot of these videos where a lot of people are saying, I need to time the market. It's not necessarily true, because you can't time the market. You should just plan to hold on to your real estate for a very long time. I'm also going to show you the condo median price as well, where you can't time the market, because if you look here, right before the pandemic, median price is $638,000. If you look where we are right now, it's exactly where we are. So the only way you could have time entering and leaving the market is if you kind of had an idea of what to do for a very short period of time. So I'll give you an example. If you sold your condo from December 21st all the way to March 22nd, absolute insanity, right? Prices went up 10%. Or if you caught some luck right when Silicon Valley Bank collapsed in early 2023 and when rates went down to like 4%, prices spiked up. Do you see what I mean? So these aren't seasonalities. These are things that have happened, call it black swan level events where you couldn't predict. So the idea of timing the market does not make any sense.
Right, because if you waited too long, somewhere between half a year and a year later, all of that pent-up demand and all those people looking to take advantage of low rates, they jumped in and prices skyrocketed.
So let's talk again about this idea where prices skyrocket and like this. Are we in a setup where we can see a price jump up like this again? And I'm going to say no. 2 things, and I've said this in previous videos. The pandemic is still in our rearview mirror and we can still see it, where people are probably not going to be making such rash decisions like we saw in 2021 when prices ramped up. Secondly, during the pandemic, it was the world against a virus. Right now, it's Canada fighting the strongest economy. it's a totally different type of economy. So if our rates are to come down from, call it, the 3 to 4% mortgage rates right now, where people think that the prices are going to spur up, the reason the rates are coming down will be because we have tariffs, which means that our economy is going to suffer, which means that people are going to have more uncertainty. And I do not think under those circumstances that prices are going to be jumping up like crazy. Now, where some people may have the advantage are, one, obviously, if you are not affected by the trade wars. So let's say you have a very stable job like police officer, fireman, nurse, teacher. You should be okay if you want to make a purchase of this size. What I will note is that showings in the last little bit have come down quite a bit, which is good. It means that there's less activity. But it really depends on what you're trying to buy. And I'm going to show you something that may blow some of your minds. So one of the things I've been saying is that the entry-level product for ground-based homes, so not condo high-rises, have been seeing some demand. So if you are in this category where you have a safe job and you are looking to enter the entry-level product for freeholds, it may make sense, even though there is some demand. And this is not to realtors saying that all the properties are doing this. What you're seeing in front of you are how many offers are on these properties that are low-rise homes. But these are like 9 out of 10s and 10 out of 10s. And I'll give you the price range without disclosing too much. So this is an entry-level townhome that was listed at $800,000. It's probably worth $9, and it'll sell somewhere around $9, but had 6 offers. This is a severely underpriced detached home in York region that was listed around 1.314, and it should really be 1.6, but it got 7 offers. This one over here was an entry-level townhome that was in like the 600s, but really it should be worth closer to like high 6 and low 7s, had 5 offers. You got a freehold property right here, which was listed right where it should be and still had 4 offers around the 1.112 price point. And then we had this one random outlier where it was a very, very nice done up property and it was listed under by $100,000, but someone went in with a preemptive offer, meaning no conditions, and bought it within 1 day. So there are properties that are selling, especially this one down here, which showed a 10 out of 10. But it doesn't mean that all the other properties are seeing this. So if you are trying to get into the entry-level freehold property, you may have less competition than what would have been if there were no trade wars. Now, on the flip side, if you look at the stats to date so far in March, you can kind of see we're over here around 4,000 sales. When you project that out, we'll probably get to around 5, maybe 5,500, which is way lower than where we should be on the 10-year average, which is the yellow line, more than like 40, 50%. So the tariffs are having an impact on the buyer demand. It's significantly under than the entire average since we've been tracking it. It is going to be lower than the great financial crisis. So a lot of the times you really have to understand whatever it is that you are planning to do, buy and sell, depending on what you are selling and what you are buying, it's a totally different market, and you need to understand the dynamics between the two so that you can actually interwove them together and actually make the right decision. And unfortunately, there is just no general way to blanket statement all of that because everyone's situation is different, everyone's motivation is different, everyone's financial situation is different. Now that you understand there is an opportunity for some people, if you're wondering what is selling, what isn't, which type of buyer and which type of seller has the advantage in this market, make sure to check out this video over here where I break it down in detail some more. I'll see you in that video. And remember, your move, your future. See ya.